Well, hasn't this been an interesting week? I thought I'd put a little bit of detail into kind of where we sit. Although we're about an hour pre-market close on Friday, I want to kind of put some context to the exact numbers of what we faced this week and relate it back to, again, this theme about non-correlated assets. I hate to pound a drum, but this will show you the difference between what I'm talking about. But once again, I want to kind of remind people, like, instead of focusing on what the actual cause of the pullback in the market. So everyone tries to understand and diagnose what exactly is going to happen with the coronavirus, instead of taking a mindset of more of a controllable stance, in the sense that stop worrying about what the catalyst, the exact details of the catalyst are going to be that make the markets drop, and rather focus on the fact that there's always going to be a catalyst that drive markets up and down. And so rather than try and speculate on what is going to cause it, just realize that there's always going to be something. So let's put some context to where we're at today. First of all, the S&P 500, which is, sorry folks, S&P 500 for the month, because it's important to look at the month, is minus 11.5% in February. Contrary, if you look at the most non-correlated asset, which again is long-term US Treasuries, and if you're wondering why long-term US Treasuries, we had a previous video, I believe, posted on YouTube and Facebook that talks the difference between short-term and long-term bonds. Again, long-term US Treasuries. So I'm going to go 30-year Treasury bills, and it is plus 11.4%. Again, alternatives in this exact environment. Now, I'm not going to get the exact performance because it's a little bit delayed after month end, but let's consider it being zero because they're not marked to market. They don't move. Market goes up 5%, they don't move. Market goes down 5%, they don't move. So if you look at this over a month period, it looks pretty darn good. I get why everyone is panicking and getting excited, even though we're still not even below October 2019 levels. But this is the exact facts when it comes to non-correlated assets. Now, if you look at the last 5 days, I get that it's not quite perfect. You got US Treasuries up, long-term US Treasuries up 5.25%, and then you got markets down 10.4%. So obviously it's not perfect in the short term, and that's because we have this rapid fleeing to cash, which can't continue over time, because if people sit in cash, they're going to lose money to inflation. So there's always this waiting period, and usually it takes about a couple weeks to sort itself out. But regardless of what happens with this coronavirus, what people need to remember is the markets are in crisis mode, not the financial system. So it has nothing to do with the underlying fundamentals, this quick shock. Yes, there's going to be fallout. Yes, there's going to probably be effects to global growth, but in 1 week, but yet markets react differently. And regardless of whether you're fundamentally correct on what your predictions are with the coronavirus, or whether it be oil infrastructure building or anything like that, just remember that you don't get to make the market rules. The market itself chooses whether or not it wants to sell or buy particular asset classes. So the easiest way is to have a balanced portfolio, and I mean truly balanced, where you own non-correlated assets, because think of the advantage that we can consider taking at this stage is you can start to sell some of these assets and actually take advantage of the S&P 500 in the coming days while the market is suppressed. So hopefully that gives some context to where we sit today. I want everybody to just have a great weekend, not worry about this. Corrections come at least once every year. We're just at correction territory, not even close to recessionary pressure yet. Albeit, there's worries globally, but nothing to be alarmed of, and we'll keep everybody up to date as this unfolds. But keep your chin high, and this isn't something that we haven't seen before. So take care.